Welcome to another segment of Crypto World Radio. If you're listening to us from YouTube, feel free to give any feedback, turn on bell notifications, and click that subscribe button so you can be made aware whenever these sort of crypto specific spaces get re uploaded onto our YouTube channel. If you're listening to us on Twitter Spaces, feel free to go ahead and check out the nest up above. You should see a link to our Discord, which has close to 1,100 members now, and there's always a batch of people there now active talking about markets and other things around the clock. So if you want to become a part of a vibrant community that's coming up and will be a household name over the next 18 months in the digital asset space, feel free to go ahead and join us up on Discord. I want to thank you guys again for joining me on another segment. And today, our special guest is a big fan favorite, Zoozy. And we also have our friend from the show, Field Pain. I want to welcome you guys up for another episode. So what's going on? How are you guys doing?
What's up,
How are you
Bobby?
guys doing today?
Doing great, man. How about yourself?
I'm doing pretty good, man. It seems like today is going to be one of those more smaller spaces. So we'll have the opportunity to really get into detail. I know typically with these spaces, you usually have like a large crowd and everyone wants to come up and talk. So I think today, with this being a more community oriented space with just the three of us and a handful of people, I think it'll be a good quality one regardless. And Susie, I want to thank you for taking the time out of your day to join us. I know you're a busy man. How are you today, brother? Good to have you up here again.
Thanks, Bobby. Yeah, doing well. Long vol, continuing to hold my nose and keep buying. Yeah, otherwise just continuing to build out algos and yeah, all is well. All is well. Thanks for having me.
No problem, man. The one thing I appreciate about you, brother, is that you came on to the scene right as we all got to know one another, right around like May and June, when the bond between myself and Brandon got a bit stronger, and we started becoming more in line of what other people call Disney adults. We also ran into you, so it's good to have you part of the club. Can't wait to go to Disney World right around the Bitcoin halving next year. So I'm really looking forward to that. In case you guys don't know, because Bitcoin will be having our first annual meetup at Walt Disney World next year during the halving. It's going to be called the Disney Adult Extravaganza. So feel free to join that. But on a more serious note, Susie, one of the things that you had mentioned back in June is that you know you had noticed that Genesis might be in trouble, and a couple quarters down the line, look at what's happened, and even more recently, uh, back in I believe it was mid-December, you were saying that from what you were seeing on the data points that you usually look at when you're navigating these markets at the level that you do, you were anticipating some vol, and I mean it's happened to an extent, especially on Ethereum, which is the one that you were predominantly showing us, man. So, it's pretty clear that you do know what you're talking about, and the proof is in the pudding. Just as you showed us back into space at around 3 a.m., you worked a little bit of your magic, and we saw a little bit of volatility. So that's always nice to see an individual that knows what they're talking about, and it reflects onto the market price and volatility. So I appreciate you having you up here, man. So what are your thoughts on this first week of trading in 2023? Because usually that first week is indicative about how the rest of the quarter is going to be when it comes to things like yearly opens.
So I've actually lost on my long vol position. I've been slowly bleeding out. Luckily, these contracts are out in time, and I continue to buy more and average down. Implied volatilities are at the lowest levels essentially they've ever been. Uh, whether you want to look at like sticky strike or using like a devol measure. Um, so I continue to kind of buy and hold my breath. Um, and realized vol, if you look at realized has gone way down. This actually hasn't been a very entertaining market. It's been very mean reversionary. Our are like hedges, like I'm hedging this long vol position. So, market goes down, I buy with perps. Market goes up, I sell with perps. That's been doing great. Um, it's nice to see that perform. But oh man, it's tough out there. It's been very very boring. I think we haven't seen a lot of flow really come into the market yet. Um, but overall, I think it's going to be an exciting year. I think we have a lot of fireworks up ahead.
Susie, and when you're talking about having your position in vol at a loss, um, does that contract that you're exposed to, does that track price action to the upside, downside, or is that general volatility week by week?
So I have one contract that would track it to the upside and another contract that would track it to the downside. And I have this at a different mix of prices in the January, February, March, June, and December expirations at the moment.
And
So across the board.
and how is one in this derivative market when it pertains to digital assets? How do you hedge against a drawdown in vol? Is it just like a one way ticket for exposure, or is there one way to hedge against it?
So let's think about. Uh, I hope everyone's familiar with calls and puts. It's a contract that allows me to buy um, a stock, commodity, whatever it would be at a certain price. And there's two ways to do it. A call, I would have to buy it. Security, a put gives me the right to sell it. Um, what I would do is let's look at something like the 1500 straddle, right? I'm going to buy the call, which gives me the right to buy at 1500, and I'm going to buy the put, which gives me the right to sell at 1500. Right? Now that seems kind of funky, right? Why would I do that? Well, there's a price to that contract. Let's say it's Bitcoin's trading at $17,000. Let's say in 90 days, the contract's worth 3,000. If I buy both sides, that totals $3,000. Now, if I didn't hedge, what I'm saying is that from this 17,000 points until by expiration, we're going to be 3,000, basically $3,000 or more higher, or $3,000 or more lower. It's essentially what I'm expressing with this position. Now, the market's going to continue to value these contracts at different prices. Some days it's 3,000, some days it's 2,900, some days it's 3,500, and then the market keeps readjusting the value of what it thinks each of these contracts are worth. Now, as the price moves up and down, right? My let's just say 1,500 call, 15,000 call, or we're doing 17,000 BT. My 17,000 call is we go to 17,500. My 17,000 calls in the money, and my 17,000 put is out of the money, and my delta has effectively changed to go longer the market. What I'm going to do is hedge that through a future and basically say, no, I want to reset my delta to zero. Now, as the market goes back down to 17,000, right, because time passed, I lost money on my contracts. But what happened is I actually gained a little bit of money back because I shorted a little bit at 17,500 and captured profit at 17,000. Does that make sense?
Yeah, I'm listening. I'm listening to you. How does this differ compared to your traditional options derivatives on the equity markets, given that, crypto and equities sort of fluctuate in how different the liquidity works across something like, say, a Bybit, right, versus something like a Fidelity? How is that any different? Do you notice any differences between like the flow between contracts?
So I mainly hedge on the exchange that I trade these options on, and it's, the biggest exchange. So, uh, and given the position I'm taking, I'm not really worried about liquidity. I think liquidity's actually been fairly good in perps. I've had no trouble really getting filled at the prices that I need to get filled at with the size I need to get filled at. I would be more concerned if I was short volatility or short that straddle, short that call, and short that put, and being happy. What I'm doing in my case is I'm doing the opposite of what the market's doing. If the market goes up, I have to sell a little bit of futures, right, or a little bit of spot, whatever it is. And as the market goes down, I have to buy. I have to buy a little bit of spot because I've been getting shorted. Now, if I was short vol, as the market goes up, I actually have to buy. As the market goes down, I have to sell. I'd be much more concerned if I was in a position like that. Um, so I have no concerns with the liquidity with what I'm doing, but yeah, I would be worried about breaking out of this range.
Susie, and talking about like options flow and all that stuff, are you personally looking at some more longer dated options, say like Q1 of 24? I know that's a bit longer out, but are you seeing any interesting flows coming from that end? Because I know we have the halving, which should be April or early May of 24. So are you looking at that to play into seasonality? Because I'm sure that some of the individuals that do take large portions of that vol, especially during these times of drawdown year over year, the individuals that are left are essentially those that have stayed solvent and know that this is a market that loves to run just as much on narratives as it does with things like order flow, liquidity, volume, things like that.
Yeah, so my general opinion right now is uh so the March 2024 contract doesn't exist yet. It's gonna exist probably like March 31. So that'll be great when it exists.
And do you think
My expectation is if you look across the market right now, regardless of expiration, the put volatility is greater than the call volatility. Essentially, people think that the uh, amount we can go to the downside is greater than the amount we can go to the upside, or they're more scared of the downside. There's more hedging demand. I think in that December 2023 and March 2024 contract, we're going to see the opposite, where we're actually going to see calls be higher priced than puts. And I think it's a general good trade to sell an out of the money put to buy an out of the money call. Again, it seems like something that's and it hasn't come out yet, so I don't really know, but it seems like something that would likely happen. Um, and we've spoken about this before, but I think miners likely on average are mining somewhere between, let's just say, 14,000 and 20,000. And going into the halving, I would expect that, again, if energy prices and hash rate, yada yada, difficulty stay the same, that price is going to come up to 28,000 to 40,000 per Bitcoin. So I especially if we stay at these levels, I think that trade's really interesting. Um, but as far as Q1 goes, do you put that position on now, or do you wait for prices to go lower? Do you wait for the vol to change? Um, Those would be my general questions kind of around that trade.
Susie, so at that point, given that the contracts won't come out until the end of Q1, at that point, it would be alpha. It would be some alpha and very indicative to go long vol at that point, given that should calls be that higher beta play, instead of like the market's hedging more towards downside. They're scared that there's more downside at that point. Do you think that that options flow could reflect into the regular spot market and perhaps cause a similar rally like we saw in the summertime? So say like perhaps a Q2 rally to the upside, similar to what we saw in over this past summer.
It would be great if retail was the end user of that, because predominantly what we see in the options market are these large sellers of calls, right? The miners to generate yield on their current, um, incoming supply. What they're expected to mine this month, or their current treasury. They're essentially selling calls on it. So given that uh, they're a major call seller, the end kind of user there has always been the market makers. If I'm long calls, I am going to essentially short the perpetual future on the way up, right? I'm going to bring this consistent resistance to the market. So if we had something like, let's just say, miners sell a lot of calls and we had retail go and buy a lot of calls, I think that would bring a very interesting dynamic to the market, where you don't have any market maker hedging to the upside. Um, yeah, that overall, yeah, I think it's generally a good trade. But again, it's can enough uh, retail slash people pick up the call volume that the miners are going to unload. I think that would create even more drama for the happening.
Susie, and in regards to Genesis, given the amount of information that's out there, things are looking pretty grim. And the Winklevoss twins essentially told Silbert that if if he doesn't agree to fill in that $1 billion hole by the 8th, which is 2 days from now, potentially you could have some of those headwinds hit the market. Are you seeing anything right now that is indicative uh, of that coming onto the market?
Um,
And I
Again,
asked
it's
this. I asked this because, what we've seen over the last year is that if something reeks, if something smells funky, you usually start seeing, longs get blown out, like we saw with FTX, and like we saw with Terra, and like we saw with 3AC. You start seeing these BART chart formations, excuse me, and more more bearish positioning. And I'm looking at things now, and there's just nothing excited unless you're an experienced player like yourself that's more in the derivative side of things, or you're or you're playing on chain on like Solana or Avalanche, right?
Yeah, I would say what's a little funky is we definitely noticed Genesis, I would say, step up in flow in December. I expect this could be some of their traders trying to get a end of the year bonus and kind of juice up their P&Ls before the ship crashes. I would expect some more exits from that team. I know they just wound down their kind of like wealth management division, which I'm kind of, or I don't know if it was Grayscale's wealth management division. I don't know which DCG parent co it was.
It's all
But I'm,
Barry. It's all Barry. Like
yeah,
all that
yeah,
is owned by Barry. It's like Barry's sandbox, and he's like, have you ever seen Have you ever seen Bugs Life? You know, the old Pixar movie.
Of course.
So you know when you see Bugs Life before the movie showed, there was this old man playing chess, and you thought he was playing with his twin, but all he was doing was going from one seat to another seat, playing chess with himself, and he has no idea how to win. Right? Both sides do not know how to win until the opposite guy ends up winning the chessboard, you know, and you don't find out until like Bug's Life gets released on DVD. So it's like you have Barry playing chess with himself, and he's counter playing himself, and slowly but surely everyone is starting to know, but it's the audience that tells the old man at this point that he's the one that's playing himself. You know what I mean? And in the future, when all this is documented in some Amazon or Disney Plus series, right? The life and times of Barry Silbert, um, we're we're gonna find out in the most ironic fashion, dude. You know, and I find it so odd how like I liked the tweet yesterday, uh, where Barry says that nobody has to worry because the only bailout call that he's had so far is from Luna. And it's so ironic that a few quarters later, it turns out that he had a hand to play in that. So he played himself. He literally played himself. How do you do that? You're in the game for 10 years and you played yourself. You know, like DJ Khaled. I played myself. I'm a fool. I'm a fool in a man's shoes.
No, it's it's difficult. All of us come from the tradfi space generally. Um, I think Barry does himself. And a common thing is to go and liquidate a big position and then go and take it and absorb it when that person can. I think that's what they effectively tried to do. Um, but and I think your analogies, generally, correct for him. And he does control a massive amount of Bitcoin. It's a story to keep watching on and be on your toes about. What and I do want to give a kind of a similar analogy to the market. If we look at what's essentially happened, I don't know if you guys have ever saw Squid Game, but one of the first episodes, it's like this stop and go game or red light, green light. And that's essentially what we've had is the market goes and makes a large move, and then it's red light. The market doesn't move at all. And then the market makes a large move, and then it really doesn't move at all. Um, so given kind of like this environment, right, it's when we're kind of on red light here and the market has just continued to move sideways, you begin to wonder how long until green light you know comes on. And it's all of these stories are exact reasons why the green light comes on. In October, we positioned fairly long vol. We had no idea that FTX was going to happen. It just vol was incredibly low. Vol was low for a long time. Uh, Therefore, it doesn't make sense to short. If you are shorting, it's likely a bad idea. You're like, this is the time where you're going to get annihilated. So at long vol, this is kind of one of those similar scenarios, right? Vol is just so dead; it has to go up. Like people have to interact with this thing. So I think right now I don't know, I'm kind of pacing around, and that's a story that's kind of on my head. Um, I've mentioned Marathon kind of on the show a few times. It looks like they figured out their situation a little bit. I'm disappointed, but they figured out their situation.
Whoa, 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 whoa. Susie, back up the truck. Back back up the truck here, dude. What is going on? You're grateful that they didn't get margin called?
He's
Is that
praying on their downfall, bro.
They
I
preyed
mean,
on the
it
downfall,
definitely
bro.
helps the long vol thesis. It doesn't help the uh, you know, Bitcoin go up thesis, right? I own ETH, I own Bitcoin. I don't own many USDs. It's I'm on the bandwagon, so
Are you still T-wopping?
I still am. I still am.
That's the reason why ETH went up 10% over the last month, guys.
It is not.
Probably the only reason, dude.
The sole reason.
So let's not mention Soul around here, dude. That's like the Lord
Like
Voldemort name.
Voldemort.
Yeah, dude.
I'll,
The
I'll
one
I'll
name.
happily I'll happily say it's a shit coin now. Like you guys are just gonna be trading vol on it. I'm pretty sure the only reason it's up right now is because that thing bonk.
Yeah,
Uh,
that's basically it. Injected a bunch of liquidity in there.
yeah, like there is no long term thesis around that. And again, like next cycle, look, Soul has problems. Like you have to worry about the vesting period of some of these guys and those unlocks, coming on, especially like FTX's and Alameda's unlocks that are going to probably be used, to go back to previous customers. So wait for something that has a new vesting schedule.
I
Um,
I kind of have a suspicion that it's Gary Gensler who was selling all those Alameda tokens. Gary's gonna come out with his New York accent and be like, "Okay, okay, we need to
I did
sell
it.
all these Solana tokens, and we have to make it a security. It does not pass the Howey test." Him and his
what's
Howey test, bro.
and what's interesting is you have him saying that Ethereum is actually a commodity.
Well, I mean, dude, he's been talking about this for years now, dude. He was a professor, not a professor, but he taught at MIT for like a full semester, dude. Like as a matter of fact, he was right there when Circle was creating USDC, dude. He was right there alongside with him. So, I kind of think this whole Silvergate thing and USDC drama, like I just don't see it happening, dude. It's like the framework for a CBDC. Um,
No. Did you guys see Silvergate? Like it was
th-
yesterday.
their stock, I know that their
Yeah,
stock was going down, but it's sort of like, is the stock is are some stocks really indicative
Of the
of the
company's
company,
health.
dude? Because if you look at
Yeah.
some of these bank stocks, dude, they're still down like 80%, 70% relative to their oh
dude.
six oh
If you go
seven
if you go
highs.
down 50% in a fucking day, I mean there's a
Yeah,
problem. It wasn't like this was a 6% down.
That's fair.
yeah, yeah. I mean, it, it- mm, maybe I'm just too much of a plebeian, dude. Uh, I'm just used to seeing such large red candles, dude.
You're
Being
not
in this
phased
being in
anymore.
this market, I'm really
Yeah,
not, dude. I think
this isn't crypto, man. This is like a real company that just got devalued 50%. This isn't bonk, like
yeah, yeah. What do
But
you think?
do you think that's just like fear though? Or like what I mean, like who are the sellers? Like do
I
you think that's just indicative of like the company's health or what?
I'm pretty sure they lost like
Or is that just
uh,
speculators?
I'm pretty sure they lost a couple $100 million on all this crypto stuff. Um, so I think they're
That'll do
losing money. Yeah. Uh, it's not a good situation. One thing I did want to discuss. I've been spitting this idea around, and I'd be curious if you guys have any opinion on it. Now, there are a bunch of signals in the market that like we all can use, right? Like let's think about like Bollinger Bands, RSI, moving averages, yada yada yada. Now, I think you could generally classify a lot of these signals into mean reversion or trend following. And I think you can generally classify markets in being mean reversionary or trend following. So my question is essentially, and I'll probably backtest this, but can I go throw together 100 signals and use an instrument like BTC or ETH and classify regimes into mean reversionary or trending, and essentially turn on these 100 algos or 100 signals, diversify the risk between them, and say, hey, based on your signal, take a position because I know you're a trend-based signal and this is a trend-based market. And I know this is a I know you're a mean reversionary signal, therefore, and this is a mean reversionary market. Okay, I'm going to turn you on. And now I'm just imagining, like, on TradingView, you have like hundreds of these things, right? Could the game, you really start playing as just the regime classification game and say, hey, this is a trending market, like screw price. Can you say that the market's trending, or could you say that the market's mean reversionary?
Well, the only thing I can say to that, Zoozy, is give examples of history, right? And the more recent one is last year in January when you had monthly bearish divergences, and you do not play with that. And until I see like bull divergences on the monthly and start seeing things like the MACD turning green on the weekly on both BTC and ETH, when I start seeing those two things, um, I'll start being more bullish. And
Yeah,
also,
what it sounds like you're really saying is that, hey, I need this mean reversionary signal to go off, and then I need my trend signals to start going off.
I mean, it like if you look back on history, it
I
essentially
think
leaves you with like a 5% leeway, and that's pretty indicative of good risk to reward. But if we talk about like moving averages, the only one that I ever pay attention to is the 20-week SMA, or like the 200 weekly moving average, and the 200 weekly moving average is just like basic left curve stuff. If you're,
Why aren't you using the 19?
I wish I had an answer, dude. But unfortunately, I've never looked at the 19 ever.
I think it's important, Zooski, to differentiate like trending upwards and trending downwards, and then also like take note of the total liquidity, because I think a lot of signals like that work a lot better when it's trending upwards. So like if you're using something like, let's say, Fibonacci's, or whatever it may be, moving averages, you can take, like, I've noticed that there's a much higher probability that if we're in a upwards trending market, that it's gonna, like, those signals will be a lot more reliable when liquidity is rampant. But whenever we're in a situation like this where it's just like a slow chop grind down, then a lot of those signals become less reliable, as you might have a deviation below, but then since there's so little liquidity, they can easily just take it back up and get people off sides really quick. So I think that um until you see, like, because I feel like if when it's trending, you have a gut feeling like, okay, like, it's time to get back on. Like, I think it's more of like an intuition thing, at least for me personally. um and so and I think also just gauging like sentiment from people on Twitter, and you know seeing like, okay, you know, it just went down in a 30% daily candle. That was the peak sell volume for the year. Like, that's probably at the very least the local bottom. So I'm going to get long. You know, I think, stuff like that, just, I guess, simple stuff works better for me personally. Um,
Payne, you're talking
but
about the 12-hour death candle, right?
exactly.
Yeah.
Like, I don't need any other signals to know that, like, obviously, like, FTX was a little, like, that was a small local bottom, as far as like, like, me and you were just talking about that, like,
Payne,
okay, yeah, dude, it's
Payne,
the
that was
peak
like
spot selling.
that was peak fear. That was peak fear, but like normal selling. And then like the fact that we had some people making fun of us for saying that we should start looking at like at least what
Alt.
narratives, yeah, at least what narratives to look into. I just find that so ironic, but at least what I'm seeing now, dude, is like what not to touch, and what I'm not touching is anything that's just gonna bleed out.
Yeah,
See,
Versus
same.
I
versus BTC right now, dude. Like, dude, AVAX is literally making like
It's
new
code.
lows every other week. It's making new lows, new lows, new lows. So like, even though we joke about like the whole AVAX is revolutionary and how it's gonna change the way we purchase Snickers bar in Germany, the
It's
fact
gonna
of the
be the
matter
price of a Snicker bar real soon.
that I guarantee that's going to be the bottom for AVAX. The fact of the matter is, dude, I think it ranks like top 10 in inflationary tokens this year. You have 25% of its tokens coming out, and almost all of that is coming from vesting. What do you think is going to happen, bud? It's not going to be
what
Zoo that's going to bail you out.
Wabi, I definitely agree with your fundamental points, but I do want to get back to the matter. Whatever the 12-hour death candle is, I don't care. I don't care what moving average you use. What I'm saying is you can classify that signal that you guys are using likely in terms of trend or mean reversion. And again, during crisis, when do you want to turn on your mean reversion? When do you want to turn on trend, right? Beginning of crisis, you likely want to turn on trend. End of crisis, you want to likely turn on all your mean reversion stuff. And all you guys are saying is that I have one, mean reversion signal, or I have one trend signal, and I won't dip my toe into the market until this one signal goes off. Well, then you're probably not playing in the market all the time, or when you play in the market, you're all hands on deck, 100% allocated. And then if you want to say, oh no, I got 50%, and then if another 50% on this one, you're staying out of the market even more, and staying in USD because you think that's a better investment. What I'm saying is the 20-week could be correct, the 18-week could be correct, the 15-day could be correct, the 38-day could be correct. But imagine having a couple of these that the signal generally isn't too correlated, like a 0.8 or a 0.9 correlation. If you mocked up like a portfolio equity curve saying, hey, I'm going to buy above the 20-day moving average, I'm going to sell below the 20-day moving average. If I did this, what would my portfolio look like? Create 10 of those with trend signals, and you can essentially diversify the risk between those. Go and get a bunch of mean reversion stuff. Go get Bollinger Bands. Go get RSI. Go get ATR. Whatever it is. You can even use your regular, resistance and support you draw on a line. I don't care. But would it be easier for you if you could just say, hey, the market's kind of trending right now. Therefore, this stuff, these signals should generally work. Or hey, the market's kind of mean reverting right now. Like, wouldn't that be great? Like sometime in around Christmas, you said, hey, this looks like a pretty mean reversionary market and we're not going to move a bunch. And all of a sudden, you're like, all right, I'm going to turn on my mean reversion signals. That way, when the market goes down, I'm a buyer. When the market goes up, I'm a seller. And then you turn this on, and when you start to get less reliance in that this is going to continue, or that this mean reversion trend is going to continue, then you can slowly de-risk from your mean reversionary stuff and go start allocating to your trend stuff as you expect the trend to come about, whether that is up or down.
Yeah, Susie. This is why you blow us out of the market, dude. Uh, this is why we're plebeians compared to you, brother. I've never really thought about it like that with crypto as far as technicals. Um, Really, I've only looked at things that have happened in the past because that's all I can do. What I lack in is forward guidance. Like I'm more backwards looking than I am forward looking, you know. So if I see something like BTC breaking the 20-week SMA, I can easily look back on whenever it's done that, right? Did that it did that in early April, late March of last year. It did that in late November of 21. It did that in early May of 21. Um, and it also did that in, I think it was late June of 2019. And anytime it breaks out above it, it's typically, anytime it breaks out above it and has at least like 2 weekly closes above it, then you're safe. It's kind of like I'd rather be late to the party and know what music is playing rather than saying, all right, I'm just gonna dip my toes in, right? Because I made up this indicator, right? Like my brain has not had the competence to think of like 1,000 different things in one. I can only move structurally, only a few things at a time. But see, that's why we have you on the show, right? So we can learn from you. And I think that definitely outside of like macroeconomic stuff that people can do on their own and coming here on Twitter, it's establishing friendships via networking. And, that's why I'm proud to have you here, man. You can describe things pretty simply, like you did with Genesis, and then you can absolutely mind fuck us with what you just said. And I really wish I had a more detailed response, um, but I'm still I'm still learning, man. I'm still learning when it comes to
So
that.
I mean,
so
I kind of understand what you're saying, Zuski.
mhm.
Are you saying like basically in a trending market that signals are more reliable, and why don't you just rely on those more in a sense? Like when you know that it's trending?
Is a moving average indicator a trend following signal, or is it a mean reversionary signal?
It's trend. It's essentially trend. So
And RSI being above 80,
I do not pay
what do you
attention
do?
to that. RSI, I've never paid attention to RSI ever.
Let's say a close above a Bollinger Band.
I've
What does
never
that
looked at
mean?
that. Never. I've never looked at anything else ever, 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 except except these two things when it comes to moving averages: the 20-week SMA
No,
and
no
the
moving
200
average.
weekly.
What other
But
signals do
like,
you have in your
Weekly,
land?
so weekly MACD and any kind of monthly, again monthly divergences, and the monthlies do not play.
Okay,
Monthlies do
okay.
not play.
So your divergences, right? Your divergences. Why would you never do this on a weekly?
Well, monthly is
I
more
mean, it's
higher.
just it's
Monthly is
less
more.
reliable.
Yeah, monthly is
Especially what I
more.
was trying to say. Sorry, Wabi. I was trying to say
Yeah,
like earlier, um, like a weekly moving average is a lot more reliable in a bull market than a bear market, in my opinion. Just because if you get a close above a weekly, it's like okay, we're going up. If we're in a bull market, like duh, like it's because so many people are relying on that signal, and like I said, liquidity is more rampant. So it's just like it's going to trigger auto buys, and people are just going to buy just looking off that one signal. So it's a lot more likely that that'll be reliable versus if we get a close above a weekly in a time like this, I question myself more because I'm like, is this just a trap? Is this just like, are they just gonna bait people and deviate below? Because
So,
yeah,
so I think a really good exercise is go take a 20-day or 20-day moving average on Bitcoin and say, hey, if yesterday we closed above um, the 20-day moving average, I'm going to buy Bitcoin. And if yesterday we closed below, I'm going to sell Bitcoin. and get out of my position. So I'm never going to go short. I'm just going to buy it, right? If you look from 2014 till now, this portfolio did amazing from 2014 to about 2018. After that, it has had zero returns. So if I went in 2018 and I said, oh my God, guys, the 20-day moving average is the best signal in the world. Look at this. The portfolio curve is literally up and to the right. Like you barely lost fucking money. It's incredible. And then I went and allocated to that strategy in 2018. I would have had zero performance. I would not have made money since that point. I would have just gotten chopped up. So it's hard to go and say, hey, this signal is going to work now and it's going to work forever. It's a better framework to come and say, hey, I have a general amount of signals and I don't know which one's going to work right now, but I know I want to do something mean reversionary at this point. Or I know I want to follow the trend at this point. I don't know which signal is going to work. I just have this basket that I know generally 1 or 2 or 5 of these are going to go off. And if I'm super lucky, all 10 will work. I think that's probably a better premise to go off than being binary, 0 to 1 and saying, hey, if the signal goes off, I'm allocating. If this doesn't, I'm not allocating. At least at that point, you can say, hey, I'm going to allocate 10%, 20%, 30%, 40% on all of these different
I
trades that
agree.
have
I've
all of
noticed.
these different, price targets and stop losses. It allows you to stay in the market for a long time. And
I
yeah,
mean, yeah, I agree completely. Like all the people I've noticed getting wrecked this year are the Fibonacci traders and the moving average traders and people like that, where they just relied on like 1 or 2 major signals and they're just like posting bull porn the whole way down. Um, those are the people that I've noticed getting wrecked. But I mean, I think it's more of like what I was saying earlier, in a trending market upwards, you can rely on those signals more. And I think that those signals work a lot better and you can put a basket of those signals together to become more reliable. But at a time like this, I would rather just wait, like, I would rather just wait for the real capitulation because I think at this point it's fairly obvious that it's probably going to come at some point before there's no real reason.
Guys,
Like I would rather just zoom out and just notice
g-
that
g-
there's no real
g-
guys,
reason we're just going to
g-
rip.
give me 1 second, Wabi. Give me 1 second. So Payne, totally agree with you. Totally agree with you. But you did say something earlier. You said, wow, this feels like real capitulation during the FTX event.
For sure.
What you said there is that the trend is going to stop and mean reversion is likely going to happen in some aspect. And that's where I'm starting to zoom out and say, hey, I'm not just going to keep all of these signals on all of the time. I'm going to go and try to say, hey, this is a trending environment. Therefore, trend stuff should be going off. And I should only pay attention to my trend signals. Fuck the mean reversion stuff. Hey, this is a mean reversion environment. I'm only going to pay attention to the mean reversion signals. Screw the trend stuff.
That makes sense. I see what you're saying.
excuse me. I'm having some chips. But listen here. The sheriff is in town, okay? I don't want to I don't want to be made stupid by you guys even though you guys are smarter than me. But look, as far as mean reversion plays, what do you guys think about this? Now, in June, right, on Father's Day, when daddies opened up their surprise presents, they got a 4-hour death candle, and it was the largest 4-hour death candle in all of Coinbase history as far as BTC that was sold. And then in November, you had the biggest day in Coinbase history as far as daily volume goes towards the sell side. there was close to 200,000 BTC being sold on the market on November 8th or 9th, around there. So we've had those two things, right? Hourly time frame, daily time frame. Now listen to this. What if all of this narrative of DCG and the Bugs Life boys over in Gemini, right? What if all that culminates in the largest weekly sell volume in Coinbase history? Because it's always Coinbase that typically marks bottoms and tops. And if you guys want to remember tops, well, just remember at the top of every bull market, Coinbase is the number one downloaded app. It even happened in June of 2019. It was the number one app downloaded in the App Store. And I think Coinbase gives some pretty good signal as far as like mean reversion plays. But again, I think when you start going into more higher time frame stuff, like imagine we have the largest sell volume candle and the weekly in Coinbase or Binance history. I think not only is that indicative of a mean reversion play, but I also think it's a start for higher time frame stuff, right? Because once whatever player absorbs that sell volume, because you do need a buyer for every seller, I think at that point, vol will be a pretty good play. But I also think some spot position would be pretty dope because that's when your risk to reward for catching a bounce like Solana had, right? Even though Solana was kind of like everyone who's active in the market buying Sol, I don't necessarily think it was just like a short squeeze. I think there were a lot of people who were active in the market that bidded Solana up. I think you're going to see that across the market when we do have that weekly sell volume. But that's like some of the things that I've looked at for mean reverting stuff, little things like that. So I think eventually those signals that we got for mean reverting plays eventually end up as more higher time frame stuff. If we take a look at the way we bottomed out last bear market, it was a 4 week long dystopian nightmare. It was dump, chop, dump, chop, dump, chop until we finally reached 3,100. And take a look at what happened off of those lows. Look at those altcoins, dude. Neo went up 400%. ADA went up 500%. But imagine, right? You looked at what happened. It was the largest sell volume in miner history, right? The two biggest miners were dumping on you. They were going on Telegram saying that they were going to dump the price below 1,000. So when you look at things like that, I'm sure there were individuals that probably bought near the bottom and exited halfway throughout that bounce, thinking that it was a mean reversion play. So I think at some point, Zoozy, don't you think that those mean reverting plays could turn into more higher time frame stuff?
Yeah.
So
So sorry.
oh, go ahead, Ben.
Just to add on to that, like when are you buying spot versus just longing vol? Like what is that turning point for you?
So I quickly want to address with alts. I think it's like it's such a perfect example. I can go and build a basket of 30 altcoins, put trend on all of these altcoins, put mean reversion on all of these altcoins. And one of the things I'm not comfortable with on these alts is mean reversion. I'm super comfortable with trend, but why am I not comfortable with mean reversion? Is it can go to basically infinity, or it can basically go to zero. We get this. It's a much higher tail event that's likely in the altcoin space, and I think that's why everyone likes it in general, right? You guys are talking about buying stuff at 20 cents because it's going to end up at $8, right? That's a huge right tail event.
Yes.
And I think that trying to make a bet on that really right tail, the best part to make that bet is not when you're in the really left tail, because when you're in the really left tail, the chance you go to zero is also really high. The best time to make that bet is when to say, hey, I want to go and play altcoins that are trending higher. and then you go and you put your trend indicators on and you say, hey, long only trend, and that's the way you'll pick your alts. There's no reason to go and try to pick the bottom of Neo or whatever it is, because go miss the first 100%, you'll still get 200%. That's plenty good. You don't need a 4x every time, but a 2x and being able to get out versus a 4x and riding it all the way back down, those are meaningful differences.
Zoozy, we can also go back to Bitcoin then. On that same time frame, BTC put in a 400% within. They put 400% in H1 first half of 2019 from 3,200, 3,300 around there.
The 200-day moving average on BTC is at 20K. Are you worried about missing now to 20K?
No. I'm saying the 2019 yearly open all the way to that high to 14K. About that 5 month gap, BTC put in about like 400. No, my bad, 300%. So it wasn't just like altcoins outperforming BTC. Like BTC also ran hard. So like the statement was sort of like when does a mean reverting play turn into more higher time frame stuff overall? Because when BTC goes hard in either directions, altcoins usually uh, follow through with gusto.
Yeah, my general opinion is you should use a mix of time frames. I don't know if higher time frame or lower time frame is better at any moment. It's best to use a diversified mix, right? If you're not diversifying your asset, at least diversify your signal. And frankly, I don't know if crypto and in general in the long term has any real correlation differences. Like, yeah, of course, some of the alts definitely do go to zero, and ETH and BTC are around, but most of crypto is fairly correlated. So it's good to be diversified in the signal if you can't be diversified in asset.
Hey guys, I kind of want to shift the conversation. I know there's one guy, Susie, that has been meaning to ask you some question or to give his statements. He's a huge fan of yours. We have Nicholas. Nicholas, what's going on, man? Excuse me for having you
Okay,
there for like 30 minutes. What's going on, brother?
it's okay. I was going to tell you, Susie, that if you want, at least this is the way I do. If you want to identify like a trending market versus, reversion market, I tend to use volatility and then filter that volatility to a momentum indicator.
around this time, like people are more active as the space goes on for like 15, 20 minutes, and then we started pumping to like 90 listeners. We were there for a while, and then plap. But these things happen with spaces. They happen. Uh, but either way, we were already crossing that hour mark. But yeah, I know we had Nicholas. He was like asking his question and giving his statement. Um, sorry for that, dude. Sorry for that, man.
Yeah.
Yeah.
What I was saying is that if you, I mean, at least this is the way I do. And when I want to identify like a stationary market versus a non-stationary market, which you may define as a trending versus a mean reversion market, is by using momentum and volatility. And the way I do is, it's a little bit like arbitrary. It's like back testing and making a threshold in which at this point, once volatility crosses this threshold, we became like a trending market. And this is when I changed my strategy.
Yeah, and I exactly. I have kind of a similar setup going on. Essentially, it's a, I don't know, probability of, hey, at this point, what is the chance for regime shift? Um, yeah, some of my techniques, I look if the market's kind of like auto correlated. So, does one day up mean that tomorrow's up, and kind of how's that auto correlation trend been going over the past couple of days? Uh, Change in realized vol and range break. Yeah, I think there's a lot of ways to do it, but the verbiage you used is definitely correct. Nicholas, do you look at autocorrelation at all?
Yes. If you want, like, I can send you, like, we can share some indicators if you want, because I try to work in like a lot of these quant stuff that, sometimes, like you say, sometimes works, sometimes it doesn't.
Yeah, definitely. Or I don't know if you're connected to what APIs are you connected to right now? Just regular exchanges, or are you using any kind of alternative data?
No, I try to like build these like um, basically like it's like you say signal correlation in some indicators based on volatility and momentum. And to make it more easier, like I put those indicators on TradingView.
Oh yeah. Perfect. Definitely. Yeah. We could definitely exchange some. I have no problem doing that.
Nicholas, if you don't mind me asking, do you speak Spanish?
Yes,
No,
I do.
I speak
Oh,
Polish.
I do speak Spanish.
Oh, okay, that's good, bro. I speak Spanish as well. Uh,
Oh
good.
yeah.
Yeah, bro. I'm Cuban, so I I
Oh
I recognize a lot of accents when it comes like to the Hispanic side of things. There's not really many spaces that have like Spanish speaking individuals when it comes to crypto. I think I've only ran into like one of them. That was for NFTs.
Nicholas, do you trade the primaries or alts?
no, I only trading like majors, because what I found out is that these indicators like do not work in like things like, let's say, Lido or Bonk
Yeah.
or things of that nature. It only tends to work mainly on BTC and Ethereum.
Yeah, I think I found similar stuff. Simple trend actually works very well on alts, especially things that are popping up and gotten into the top 100 pretty recently.
Nick, also
Yeah, absolutely.
one thing that coincides with breaking like the 200 weekly moving average and things like the weekly 20 SMA is that there's this like pretty low IQ left curve indicator called the super trend, and when that thing turns red on the weekly, it's typically it's typically indicative of the start of a bear market, and it has not failed over the last 5 years. Like I've really only used it whenever I've been on Binance. Binance has some pretty clean charts, so it turned
And
red. It turned red on the super trend on the weekly right when we broke that key moving average. I think the weekly 20 was at 57, 58K, and that's when we turned red. Like it went red the
the
week before Thanksgiving, and that was like so gnarly.
the
But
the, the issue is likely going to be your sample size. I used to have this great indicator, this mean reversion indicator, 100% win rate from like 2008 till 2020. Worked all through the 2008 crisis. When it came to 2020 and that COVID crisis, it didn't work. You got fucking hammered. It eventually worked, and we can all say it eventually worked, but if you actually took the signal, you likely couldn't hold on.
yeah,
Yeah, I
I
mean,
know
That's the
a lot of
diversification of
algorithms,
signals.
for
a lot.
myself, dude. Like during that time period, I was trading shit coins on Terra, and also like some own fork stuff. Um, so it's like even though it kind of went bearish, there were some things that were flourishing, and along that time frame, I got into this weird, obscure altcoin that, let's just say, it's named after a Star Wars character, and that was a bag. That was a bag that I got way too hopeful on. And I essentially round tripped it to break even. I thought it was gonna be
Lord
like
Vader.
the I thought it was gonna be like the second coming of DeFi season, because even though like the market was raging, dude, DeFi was in a bear market since like April and May, and yeah, that
No,
that was kind of
I,
like my thesis around that time.
I did want to point out like two other things. One, I think it's really healthy to go and create indices around narrative. So when Solana Luna AVAX was a narrative, you could have literally just said, "Hey, give me an index that takes 33% of the returns of each coin, and let me trend follow that as an indication of how this narrative is going." I could go and do something very similar with DeFi and take the total DeFi TVL and kind of trend follow that and say, hey, how's DeFi doing? Is it continuing to trend, or are we getting into this point where we're lackluster? So if you do have these narrative ideas, I think it's really, really healthy to create an index around it, create something custom where you can better understand it versus just hearing news that you read on Twitter.
Well, guys, we've been doing this space for close to 2 hours now. I want to thank Zoozy for your time. Thank you so much, dude. Uh, if anyone in the audience wants to come up for some last minute stuff, give any thoughts, ask any questions, feel free to do so. But we're gonna wrap up within the next like 5 minutes or so. Uh, Posted the link up on Discord again up top, even though we're essentially at like 60% of the capacity that we had on a couple of minutes ago. But yeah, just did that for you guys in case you want to come and join us. If you're just coming into the spaces now, I just want to let you know that the upload on our YouTube, our next upload is going to come in the next 5 to 10 minutes, where this space replay uh, is going to be shown in the Crypto World Radio playlist. I want to thank Payne and Zoozy for coming up here, and also Nicholas 555X for coming up. Thank you guys so much. Are there any closing words that you wanna give? I know it's a bit abrupt. And like the conversation was getting hot. But it's been almost 2 hours and I gotta eat.
I'll follow Nicholas 555. He knows stuff.
Oh, we have one
Thank
guy
you.
that wants to say something.
Hey Bobby, hey Zoozy, hey everyone.
What's up, brother?
I just want to comment on that last statement from Zoozy about the narrative thing. I just thought it was really interesting because that way of thinking, where it's like you have this thing, this idea, this concept you're aware of, which is like this concept of narrative, and then you take it and you like associate it with some sort of like rigorous mathematical methodology. I just think that's fascinating, and it's kind of beyond me. It kind of blows my mind sometimes. I don't know, how does somebody get better at doing that kind of thing? Sort of philosophical question, I guess.
Yeah, I think in general it's practice, right? Like, probably the first practice a lot of people had was when COVID was going on and we were all tracking the COVID death counts and illnesses. That was like our first real practice, right? We said, hey, COVID's going on. What do I need to track? Um, and I generally think in crypto, again, it's being adaptive, right? Like one of my main narrative focuses right now is the Bitcoin miners because of where price is. Because so now I'm spending my time doing research in their 10 Qs rather than looking at the moving average of Bitcoin. I already have something for that. I need to track this narrative and see what's going on. So I would just say overall practice and have fun, tinker with stuff. Like don't be afraid to be wrong. You can find all that out later, but as long as you tinker now and you explore now, like you're just going to get better.
Yeah, I thought that idea of like Soluna AVAX in one basket, it's so simple, but that's actually a great idea that I never really considered, because it's kind of hard to like gauge the narrative itself just looking at the price action of the three coins alone. So I thought that was a great point.
It's gonna be fun to tinker with all of you over the next couple of years, man. So let's do this, bro. Tinkerbell team Disney Adults 2024, 2025. When Jerome Powell pumps us up one last time before imminent doom. Let's do this, man. Let's do this.
Have fun building, guys. Have fun building.
Oh, what are we gonna build, Susie? What do you want to build with us? Are we gonna build?
Oh no, you guys building yourselves. Are you guys
Wait,
learning?
Decentralized NFT
dude,
options.
dude, what are you talking about? NFT decentralized options, dude. We're gonna build some Legos. Come on now. We're gonna build.
Are we going to Disneyland or World?
Dude, we're going to Disney World and we're going to Legoland afterwards. Come on.
I'm there.
Yeah, dude, we're gonna make Jerome Powell his very own Lego. So before I wrap this up, I kind of want to end it on a lighthearted note. Susie, did you see Jerome Powell in his meeting in early December? Did you catch that?
What specifically about it?
So, I spammed the Federal Reserve Twitter page as well as their email, asking them if they could ask Jerome Powell what he has for breakfast and how he starts his day. And come to find out, during his surprise meeting, it actually gets asked in the exact same format. It was the funniest thing ever, dude.
I was howling, bro. That was one of my favorite moments of the year, to be honest.
Yeah, yeah.
They just asked Jerome Powell. So what? How do you start your day, man? What do you have for breakfast? Felt like I was in a Twitter space.
Yeah, that was quite something, man. So yeah, I'm thinking we make him a Lego, right, with the Jerome Powell jersey saying 75.
Build
With the
your goddamn systems, guys. Build your goddamn systems.
the
Go find
Jerome.
new indicators.
Thank you, Susie. Hopefully, we can build those alongside with you, man. So thank you again, brother, for coming on. It was great. Please don't liquidate us, all right? Don't don't depeg Tether, please. Anything but Tether, man. Anything but Tether and USDC.
Lava, your stops are on my radar. Don't worry.
Oh no.
Just yours, though. Just yours.
So thank you everyone for coming on, like I said. So I'll see you guys on Monday. To finish off, I do have a surprise for you guys next week. Next week on Thick Thursdays. That's what I'm gonna call whenever I have someone from like the institutional side of things. It's usually gonna be on Thursdays. I'm gonna call them Thick Thursdays. Because that's when the spaces are gonna get real thick. Thick Thursdays, like how I like my milkshake. My milkshakes, I like them thick, right? The thicker, the better. So with that being said, I'm gonna have one of the guys from Swan. I'm gonna have Tom Callahan, from Corey Swan's team, and it's gonna be same time, 7 p.m. Eastern. And I believe I'm also gonna have Dr. Jeff Ross sometime next week. I'm not sure the exact date. Might be on Friday or might be on
You're about to say
Wednesday.
Jeff Winter.
Oh no, Jeff Winiger is coming like end of month, early next month. So I can't really start saying that yet. But yeah, it should be exciting for next week. And then I've got Premise from the Because Bitcoin team on for Monday.
The trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians, you would have bought Dow Jones somewhere down here under 30,000. Depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.